Testing. Testing. Okay, hi everyone. Hi. Hi Bob. Hi. Hi Biel. Hi Luca. Hi Neil. Hi Charles. Hey Desiree. Hey Henny. Hey Ellen. Okay, I still see a lot of people joining, so let's just give them a bit of time to join, and then we can start our webinar proper. In the meantime, can I check if everyone can see my screen clearly? It should say IC Market Webinar Support and Resistance Strategy. All working here. Okay, thanks, Fabio. Hey, George. Thanks, Henny. Thanks, Charles. Thanks, Amit. Thanks, Bob. The other Bob. Okay, cool. I still see the attendance list moving quite a bit. So those who are just joining, I'll let you slowly settle in. But in the meantime, I'm going to do the introduction. Okay, so we're doing part 2 of support resistance strategy. For those who joined our webinar last week, we did part 1. We kind of did like the very basics of support resistance, which is like trend line, support resistance, horizontal support resistance, overlap. Today we're going to look into more different kinds of support and resistance, and then when we have, if we still have time, we're going to go straight to the charts and see how we can apply that. Okay, cool. Okay, just give me a sec. It says my audio is weak. Give me a sec. Let me change my audio. Okay, I changed the mic. I don't know if it's different for you guys. Bob is saying it was fine to begin with. Right, okay, doesn't matter. Okay, I'm going to start a webinar. I don't know if we will have time to go on TradingView today because there's 51 slides today. So I don't even know if I can finish all these slides in time, but I'll try my best. Okay, so disclaimer, you guys already know how this works. Whatever I share with you guys in this webinar should not be construed as trading advice. You should not take this as a forecasting group, signals group, whatever. This is only for educational purpose. Okay, so IC Markets brought this webinar to you guys, invited us as your speakers for your webinars, so that you guys can grow in trading and grow your account and be better traders. Okay, this is not a signals group. Okay, please only take this as educational. Okay, so we're gonna do trend lines today. We kind of already did that last week. We're gonna do channels, liquidity traps, combining Ichimoku, trend lines, and channels. We kind of did that last week. I guess this wasn't in the topic last week, but I covered it anyways because we still had time, so it doesn't matter. For those who are like hearing this topic for like the 100th time, don't worry about it. Just take it as a recap, okay? Like I said, support resistance is very important. Okay, so introducing your host, you guys already know who I am. Well, most of you already know who I am, especially those who are calling me Bob. Okay, for those who don't know who I am, which I think most of you already do anyways. Okay, my name is Cassandra. You can call me Cass or Bob. Actually, you can call me whatever you like. I will respond to anything that's close to my name. I'm an external analyst and I'm also a prop trader at Everest Fortune Group. So Everest Fortune Group is an award-winning research firm based in Singapore. We're the finalists for 2019, 2020, and 2021. And 2022. Okay, these slides are still not updated. Okay, for the best forex research and best equity research. Basically, our team is made out of traders and analysts who are very good in technical analysis and fundamental analysis. I am one of those who specialize in technical analysis. So please do not ask me anything about fundamental analysis. Chances are I'm gonna give you not the best answer. Okay, if you want to know about fundamental analysis, please wait until you join one of Yongjin. I'm sure you guys know who Yongjin is. Yongjin's webinars, and you can ask him. He is very good with fundamental analysis. I think his entire analysis, or maybe 80% of his analysis, is based on fundamentals, whereas mine is 95% based on technical analysis, and once in a while 5% I look at fundamental analysis, which is rare. Okay, it's very rare that I look at fundamental analysis, but that's that. Okay, so I do have a bit of background in finance, blah blah blah. I am a law graduate. I used to be with the airlines. I traveled the world already. Okay, but most importantly is my this is important, okay, guys, because my whole point of telling you this is to let you know that it doesn't matter what your background is, trading is for everyone. Okay, you can learn trading no matter who you are, where you are, if you are male or female, it doesn't matter. Okay, so in terms of trading, my achievements are that I have passed my Forex fund and my FTMO 6 times. I'm in the midst of passing my 7th. I'm so close. I'm so close to passing my 7th my Forex fund test. I'm only like 2% away. Okay, hopefully I pass by this week. Next week, if you guys see me next week, hopefully I let you know I've already passed my 7th test. Okay, so for those who don't know what these are, these are basically prop trading tests that requires a trader to have 8, well, depending on the company, 8 for my Forex fund and 10 for FTMO, 8 or 10% profit within the month. Okay, so you know how 1 month is 30 days or 31 days or whatever it is, but the weekends are not counted. So technically you only have 22 trading days to make your 8 to 10%. Okay, and I've done that 6 times. I am on my way to finishing my 7th one. And I was doing a little bit of research, and I later on found out that only 4% of people pass this test. So 100% of 100 traders take this test, only 4 people pass this test, and only 1.4% of traders ever get a payout. Okay, so I've gotten a payout many times already. So I would say I fall into that 1.4% of traders who have successfully mastered this challenge. Well, I wouldn't say master, but I think I'm okay in this test. Okay, so my whole point is that if you have any questions regarding trading, especially if it is technical analysis, please don't be shy. Please ask in the chat box and I'll try my best to answer you. Okay, more so if it's regarding support and resistance, because today our topic is support and resistance, right? If you have something, if you want to ask me things like about like moving average or like let me see, like Elliott wave or some other technical analysis, you can ask me maybe in the next webinar. Today we try to focus on support resistance. Okay, so yes, don't be shy, ask me questions. Okay, so what makes a valid trend line? A valid trend line, I'm gonna go quick because most of you already know this anyways. Okay, a valid trend line. Oh, actually I want to test you guys. Do you think this trend line is drawn correctly? Okay, yes, most of you said yes. Okay, it is drawn correctly. Sorry, I tried to do a trick question, but I realized this was drawn correctly. The trick question would have worked better if it was not drawn correctly. Okay, but yes, whenever price is moving in an uptrend, you draw the trend line at the bottom. If price is moving on a downtrend, you draw it at the top. Okay, and the reason why you do this is because let me pull out my pen. Okay, price is moving this way. Why is my pen not working? I'm pretty sure I clicked on the pen. Okay, my pen function is not working. Okay, it doesn't matter. Okay, so it's moving in this uptrend. When it reaches this bottom of this area, if it breaks, it means that it's probably going to start on a downtrend and the end of the uptrend. Okay, same as if it was going on a downtrend, you draw it on the top. And minimally for a trend line, we want to see at least 3 touches. Okay, please take note, 3 touches. So Maybe you can post a link of the live analysis tomorrow. I can only see one for 25th and 30th. Let me see. Why is there no? I don't have the link for that because I'm not doing the live analysis tomorrow. I'm not sure which speaker is doing the live analysis tomorrow. Let me go and find it for you. Okay, I've texted someone to ask about it. Hopefully he replies me. Okay, so minimally you want 3 touches for a valid trend line. Anything less than 3 touches, we do not consider a valid trend line and we don't really want to use it. The live analysis is on Monday now. Oh, okay, thank you, Fabio. I didn't know that because I don't take you guys for English. I only take Bahasa. Live analysis. Okay, thank you, Desiree. Thank you, Kelvin. Thank you, Fabio. Thank you, Moses. So Bob, they're saying that live analysis is scheduled on Monday now. That's why you don't see. That's probably why you don't see it. Okay, let's go into the next slide. There's a lot of slides, man. Okay, same for downtrend. You draw it from the top and minimally 3 touches. Anything lesser than 3 touches, we do not consider a trend line. Okay, another one, tentatively, again, tentatively 2 and 3 for valid trend line. It says tentatively 2. I mean, it depends on the trader, really. Some traders will see 2 touches and they will consider it a valid trend line. I personally like to stick with 3 because I feel like 2 is just a coincidence. If you look at the charts, there's so many times that a trend line touches 2 times. Okay, so for me, minimally, I would like to see 3 touches, and I'll consider that a valid trend line. Okay, so oh, I have a question. This is, would you guys still consider this a valid trend line if you see price breaking out and then going back into the trend line? That's right, Fabio. 2 is very risky. Do you guys consider this a valid trend line? So the first one respected the trend line nicely. Second one respected the trend line nicely. Third one respected the trend line nicely. And the fourth one, you can see it coming out and then going back in. Okay, so Desiree is saying yes, Bob is saying yes, Fabio is saying no. I think it's very subjective. So the thing about trading is that, okay, so especially when I just joined Everest Fortune Group, which is the company that's giving you these webinars. Anytime I see this fourth one, I will consider it as like, this is not a valid trend line because it already broke. It broke and it's not valid to me. But then I think someone said something to me, a more senior trader or more senior analyst said something to me. The thing about the charts is that it's never perfect. Your aim is to try to find the best, like the best case is that all of it respects, but there are some instances where this happens, and sometimes we shouldn't be too rigid. We shouldn't be too like strict about it, and we can kind of like close one eyes and accept it. So once in a while, if I do see this, I don't like it, but I will like, okay, we can accept this. We can kind of accept this. Okay, so if you see this, you have 2 options. Number one, you can totally completely ignore it and just say like, okay, this, I'm not going to look at this chart. Let's pretend this is XAU USD. You see this in XAU USD, you see this, you're just like, okay, I think XAU USD is not doing good. It's the charts, it's very messy, blah, blah, blah. It's not, things are not lining. Second one you can do is you kind of see it, then you kind of close one eye and you kind of just accept it. It's like the charts are just not perfect all the time. Okay, I don't like seeing this, but when I see it, depending on the rest of my technical analysis, sometimes I do accept this. Okay, so let's say I pull out an Ichimoku and price is respecting the Ichimoku, then it makes me feel like, okay, maybe this trend line can be used after all. Okay, so it's very like per situation kind of thing. This is a very per situation kind of thing. Okay, next. Okay, so I'm just testing you guys today. Is this a valid trend line? Can you guys let me know in the chat box? Do you think this is a valid trend line and why? Okay, we've got answers coming in. Nope, no, no, no. So many no's coming in. Why is this not a valid trend line? It's a downtrend. It should be drawn on the top. Okay, you guys are following. This makes me so happy. Okay, thanks guys. Yes, a valid trend line should be drawn on top because this is a downtrend. Line should be above. Perfect channel, not trend. Oh, good one, Fabio. So yes, this should be a channel. A channel. Okay, if you have to draw a trend line, it should be on top. If not, actually a trend. Like just eyeballing it, a channel looks like it would be perfect in this scenario. Okay, is this a valid trend line? Okay, cool. I think everyone got the gist of it. It is a valid trend line because it's on a downtrend and you draw it on the top, and you want, if price were to break this trend line, this will be the start of an uptrend, right? But if you drew the trend line at the bottom and price were to break that trend line at the bottom, it basically is a downtrend with another downtrend. Yeah, so okay, thank you, Fabio, thank you, Moses, thank you, Bob. I think Richard's still a little confused. This is a valid trend line. So for downtrend, we still draw it on the top, and for uptrend, we draw it at the bottom. Okay, what makes a valid channel? 4 significant touches, 2 at the top and 2 at the bottom. You can't just find 4 significant touches, okay? It can't be all on one side. It has to be 2 on the support side and 2 on the resistance side for it to be valid. Okay. Give me a sec. Do you think if I were to draw a channel here, would this channel be valid? Anyone? Okay, yes, no. Thanks, Brian. Okay, so Brian saying it's no. The reason is because, sorry, I was supposed to use my pen to show you guys this example, but my pen tool is not working. Like I keep clicking on my mouse to draw the channel, but nothing is coming out. So we just have to imagine there's a channel here. So let's say I were to draw a channel here. This channel would actually cut through. I don't even know if you guys can see my mouse hovering. Can you guys even see my mouse hovering around here? Okay, probably not. Okay. So if I were to draw a channel, I'll draw the top part. The top part looks perfect. Okay, the top part looks perfect like this. But if I were to draw the bottom part, okay, I'm gonna use another tool. Maybe another tool will work. Highlighter, maybe. Okay, the highlighter doesn't work either. I'm not sure what's going on today. Okay, if I would. Oh. Can you guys still see me and hear me? I don't know what I click, but the camera function disappeared. Okay, everyone can still see me and hear me, right? I cannot see. I don't know if the camera's function is working. It doesn't matter. It's not important that you see me. It's more important that you can see the screen and you can hear my voice. Okay, voice is clear. Can see you. Screen is clear. Okay, camera is working. Thank you. Thank you, everyone. I'm so sorry. I don't know what's going on today. Okay, it doesn't matter. Anyways, if I were to draw a channel, it wasn't going to work. My pen function is not working. That's why I cannot show you. Okay, today's the day that we learn about something new. So everything that I shared earlier on, which was the trend line and the channel, we kind of already covered it last week, although it wasn't part of our topic last week because we had time. Video is not working. We can see you in the screen. Okay, it's not working for some of you, it's working for some of you. I'm going to say it's working for a majority of you because a lot of you said yes, 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 we can see you, we can see you, we can see you, we can hear you. Okay, so today we're going to learn about Ichimoku. Ichimoku is a different form of support and resistance. Okay, so support and resistance comes in many different forms. So the first one that we covered last week was horizontal support resistance. You guys remember it's just one straight line, right? It's just basically straight. This is horizontal, this is vertical. Okay, so horizontal support resistance is the first thing we learned. That's the most basic thing in trading is learning to identify a straight line. Okay, basically. Okay, the other thing that we learned last week was trend line. Okay, so trend line is basically slanted, so it's either uptrend or downtrend, and then we also learned channels. Okay, although we did kind of touch on Ichimoku, but today we're going to go in depth with Ichimoku. Okay, so what is Ichimoku? I don't know if you guys know, but when I just started trading, I used a lot of Ichimoku because I had a prop trader friend who told me Ichimoku is the best indicator ever. So I went crazy on Ichimoku, but Ichimoku is good, but it's better when you combine it with other technical analysis. No technical analysis is good on its own. It always has to be combined with other technical analysis for it to be even more accurate. Okay, so what is Ichimoku? Ichimoku is basically like glance at one look. It means the table of equilibrium or balance table. It defines a support and resistance and identifies trend direction. So it reflects momentum. Okay, so breaking down the different lines, the Ichimoku cloud is composed of 5 lines of calculation, 2 of which comprise of a cloud, where the difference between the 2 lines is shaded in. The lines include, don't worry, this is just the theoretical part. This is just a very textbook definition. We're gonna, when I go into the picture of Ichimoku, I'll explain again one more time what it actually means. Okay, so the line includes a 9-period average, a 26-period average, and an average of those 2 average, a 52-period average, and a lagging closing price line. Okay, so why Ichimoku has all these like weird numbers? Okay, like why does it have a 52-period average? It's because 52 equals to 52 weeks in a year. 26 equals to, okay, so back then when they were using Ichimoku or when Ichimoku was created, the trading days was not 22 days a month. Remember I was saying there's 30 days in a month, but weekends are not counted. So you only trade 22 days in a month if you minus out the weekends, okay? So why is it 26-period average? Is because it's 26 days. Back then, like I don't know when was this, probably 50 years ago, 100 years ago, trading days were actually Monday to Saturday. Okay, now our trading days is Monday to Friday, but back then it was Monday to Saturday. That's why it's 26, because 30 days minus 4 Sundays gives you 26. Okay. Okay, so the cloud is the key part of the indicator. The cloud is super important. The cloud will work as a support and resistance. And when the price is below the cloud, the trend is down. When the price is above the cloud, the trend is up. Trend signals are strengthened if the cloud is moving the same direction as the price. For example, during an uptrend, the top of the cloud is moving up, and during a downtrend, the bottom of the cloud is moving down. Okay, so this is what the Ichimoku looks like. Because I don't have a pen function, it's very hard for me to point. You guys can see my mouse moving, right? Okay, I'm gonna use my mouse to show you what I'm talking about. All Ichimoku, they all come with like really fancy Japanese name. Like I think this is called Kinko. What's one called again? I can't remember the Japanese name for this, but I remember the English name for it. Okay, so just remember one. That's the most important. So this is called the baseline. This is called the conversion line. Okay, so blue is base, red is conversion line. Okay, or if you're not really good at remembering names, just like me, a lot of times I cannot even remember any of the names. Okay, you just need to have a mental picture of what this means. Okay, so let me explain how this indicator works and how it works as a support and resistance. Okay, so if the blue line crosses the red line, okay, you guys can see this blue line and red line. Okay, if this blue line crosses the red line, it means it is on a downtrend. It has to cross to the bottom side, it means it's on a downtrend. Do you change the Ichimoku setting from 26 to 20 or 22 period? Okay, good question, Jen. I know now that the trading days are actually 22 days instead of 26 now, but I still use the default settings because I find that the default settings are they're still giving me very accurate analysis. I've actually have not tried changing it to 22 because the 26 itself is good enough for me. But one day, if I find that the 26 is not working great for me, I'll probably change it to 22 to see if it works. Okay, yeah. So if the blue line is below the red line, it means that price is on a downtrend. If the blue line is above the red line, it means price is on an uptrend. Okay, so how does Ichimoku work as support resistance? It's basically the cloud. The cloud is a form of support and resistance. Do you see that the bottom of the cloud has this kind of like this red line over it, and the top of the cloud has this green line over it? Okay, all of this has meaning. Okay, so when the green line crosses the red line, it means that it's on a downtrend. If the green line is above the red line, it means that it's on an uptrend. Okay, so the best case scenario for Ichimoku is that everything is all pointing in the correct direction, and it gives you confidence that, okay, Ichimoku is signaling to me that it's up, up, up. Okay, so another thing about the cloud is that because it is a form of support and resistance, if price manages to break that support and resistance, if it manages to break the cloud, it means that it's on a downtrend. If it manages to break the cloud onto the upside, it means that it's on an uptrend. Okay, everyone good for now? Okay, so I'm just gonna like repeat the 3 important things you need to remember for Ichimoku. Okay, it looks so complicated, but there's only 3 things you want to remember. The cloud is ahead of the candle, so do we look ahead? And then in the picture, the cloud is far red, is red, turning bearish. Okay, you want to only focus at where the candles are. You only want to focus where the candles are. Then that's enough indication. When you see this red cloud ahead of like where current price is, it's kind of a signal from price saying that momentum has changed or trend has changed. So it used to be a bullish momentum. You see a red cloud, it's kind of Ichimoku's way of telling you that there is a chance that downtrend is going to start. So Ichimoku is only one indicator, but it's one indicator that gives you a lot of information. It gives you so many information. That's why I used to trade only with Ichimoku, and I found like Ichimoku alone was making me quite profitable. I mean, not for a very long time, but at one point I was making quite a bit of profit off Ichimoku. Actually, I managed to pass 1 FTMO test just using Ichimoku, right? But I wasn't able to pass my second one using Ichimoku. That's why I had to combine it with different things. What is the smallest time frame where you still use Ichimoku? What's your favorite time frame for Ichimoku? Okay, the smallest that I would go is 1 hour, but that's because I'm a day trader, right? I'm a day trader, so I'll go 1 hour. Honestly, if there's any scalpers in here and if you guys use Ichimoku, do let me know if you've ever used it with the 15 minutes or the 5 minutes. I personally, okay, wait, sorry. I used to scalp a long time ago. I remember using it on the 1 minute, and it does work. I guess it kind of works, but obviously the bigger the time frame, the better the structure. Right, so right now the minimum I will go on Ichimoku is the 1 hour. Okay, so the 3 things you want to remember with Ichimoku is that if price is below the cloud, it means that it's a downtrend. If the cloud is red, that's even better. If it is green, It's good. I mean, it's good that price is below the cloud, but it's better if it's red because that's double confirmation that it's bearish. Okay, number two, if the blue line is below the red line, it means that it's bearish. Okay, so you've got two confirmations of bearishness, bearish, bearish. Number three, oh, sorry, number three was the color of the cloud. Okay, so the color of the cloud is number three. This green line, this is a lagging span, which is, it just means that it's 26 days. I think it's 26 days. I think, yeah, I think this means that it's 26 days behind. Honestly, until today, I've been using Ichimoku for so long. Until today, I usually just go to the settings and turn this off. I know the person who created the Ichimoku indicator meant this green line for something, but until today, I have no idea what is the purpose of this green line. I don't see how it could possibly make my trades better. So I usually just go into the settings, turn it off, because it's just giving me extra noise. Hi, Jamilu. Okay, so, oh, sorry, the red one is actually the baseline. The conversion line is the blue one. Okay, I remember by the colors, not the names. So I always remember if blue is below red, downtrend, blue is above red, uptrend. Yes, but these are all the names. Okay, so conversion line is the blue line, baseline is the red line. Lagging span is this green line, sorry, blue line. Leading span A is basically that green line that covers the bottom of the cloud. That red line, like leading span B, is the red line that covers the top of the cloud. Oh, sorry, the bottom of the cloud, and the green one is at the top of the cloud. And then we've got the most important, the plot background will be your cloud itself. Okay, so if you go to trading view, you want to reduce the noise. Usually I usually turn off leading span A, leading span B, because why do I need an outline of the cloud? I can see the cloud on its own. You can leave it there if you want to. It doesn't matter. I usually get rid of the lagging span and I leave the conversion line, baseline, and the plot background. Usually I only leave these three on, the rest I get rid of it because I don't like noise when I look at my charts. I don't like it so much. There's so much nonsense going on. Okay, this is the settings that we use. It's just the default settings. This is just the default settings for Ichimoku. Yep, these are the default settings. Okay, so how do you use the Ichimoku cloud, the Ichimoku effectively? The overall trend is up when the price is above the cloud, down when price is below the cloud. We already went through this, and trend line and transitioning when the price is in the cloud. So traders will often use the Ichimoku cloud as an area of support and resistance depending on the relative location of the price. The cloud provides support and resistance levels that can be projected into the future. This sets the Ichimoku cloud apart from many other technical indicators that only provide support and resistance levels for the current date and time. Okay, so I'll give you examples of indicators that only provide support and resistance. The green line is also a basis for support and resistance. Regidor, sorry if I'm pronouncing your name wrongly. Do let me know how you would use it for support and resistance. I personally don't use it. I always turn it off, so I'm not very sure myself. Because just using the others, just using the baseline, conversion line, and the cloud, I'm able to get quite good results already. But if you are someone who uses the green line, do let us know the lagging span. Oh, by the way, guys, whatever I share with you guys in this webinar is basically from my own experience, okay? I only share things that I actually use myself. This Ichimoku cloud is literally the one thing that I use on a daily basis. I use Ichimoku cloud, stochastics, and RSIs basically on a daily basis when I am trading, and it has passed me 6 tests on my way to passing my 7th test. Hopefully I pass my 7th test. Okay, so if you do use other indicators and you are seeing very good results, do let me know the indicators that you're looking at, because one thing about trading is that nothing works forever. So just because I've been using Ichimoku stochastics RSI and I've been passing 7 tests, it doesn't mean it's going to work for the next 10 or 20 years. So if you guys have good information, do share and we can all learn together as well. Okay, so using it effectively, cloud strength, which is the color, basically you see price above the cloud and you see it's green, this is a very good sign. You see price below the cloud and you see red is a very good sign that it is bearish. Okay, liquidity traps. Okay, so what are liquidity traps? I'll show you guys an example. Okay, so you see the swing high, you're like, wow, really nice swing high reversal here. Just give me one sec, guys. I think I left. Just give me 1 minute, I'll be back. Okay, sorry about that. My door kept shaking. It felt like there was a ghost in my house, but turns out it's just the wind. Close the window, and I think I won't be hearing my door moving anymore. Okay, so you see a swing high. It says really nice swing high. You see it, you think it's a very nice swing high reversal. Okay, but price, you see like a nice level. So here you decide that, okay, this is a good resistance level. I'm going to get in here for a sell. But what happens when you get in there for a sell? Price should slightly above clear before orders dropping lower. Okay, so this is called a fake out. Okay, this is called a fake out. You get this once in a while. I wish my pen was working so I can draw this. I can draw the fake out line for you guys. Okay, once in a while you see this and you see a fake out. Okay, so how do you avoid these fake outs? Can you guys let me know in the chat box? I tell you guys to wait for this every single week. I personally don't practice it, but I tell you guys to wait for this every single time you have a setup. Wait for the reversal pattern candlestick. Okay, so reversal pattern candlesticks is when you have identified a support and resistance. You want to get in an entry at that support and resistance area. Then you wait for the reversal pattern candlesticks for confirmation, and then you get in there instead of like just setting an order, because sometimes when you set an order, my pen is not working. Okay, you set an order here for sell. This is literally what I do on a daily basis because I don't have time to sit in front of a computer all day waiting for reversal pattern candlesticks. But if you do have time, please practice this. Okay, so I usually put my order here. I'll put my sell order here, and I'll put my stop loss right above the swing high. So based on this fake out here, I would have been stopped out already. Is it just me or is audio gone? Is the audio working for everyone? Because Fabio is saying he can't hear me. Audio is fine. Okay, thanks Jen, thanks Henny, thanks Desiree, thanks Moses, thanks Simon. Thanks Nafthalin, thanks BL. Okay, I think it's just, maybe I'll just type him a message. Hi Fabio, might want to rejoin. Audio is working for everyone. Send privately to Fabio. Where is Fabio? Okay, hopefully he gets the message. Okay, so the one way you can avoid these liquidity traps or fake outs is number one, that's the first one, is to wait for, thank you, Matesh, I'm sorry if I'm pronouncing your names wrong. Thanks, Robin, thanks, Richard, thanks, Sarbajit, thanks, Calvin, thanks, Charles, thanks, Jamilu, thanks, Regidor. Okay, so one way is to wait for the reversal pattern candlestick. The other way, my question is, there is no bearish candle, but it returns to an overlap. It could be a trend continuation up, trying to determine when it's a fake out versus when it's a pullback. Okay, so usually, ideally, okay, not usually, I don't want to lie. I don't want to say that I wait for the reversal pattern candlesticks every time, but I don't. Okay, the best practice is that you wait for the reversal pattern candlesticks. If you see a reversal pattern candlesticks just like this, like a spinning top, like maybe kind of like a hammer, whatever it is, whatever kind of reversal pattern candlesticks there is, that is your sign to get in. But by right, if you don't see it, you're not even supposed to get in. So even if the reversal, so if the reversal pattern candlesticks doesn't come out, it means that you don't get in. It could be a continuation, but you don't want to take that risk because that continuation may just be a fake out, just like this example here, right? So usually when ideally, if I don't see a reversal pattern candlestick, I usually just skip the trade and just take it that all the requirements to enter this trade is not fulfilled, and therefore I will not enter this trade. Okay. Yes, you can think that, oh, maybe it's a continuation instead. The other way to see that if it's a continuation, okay, so one option is to totally skip the trade. The other option is that if you insist on you want to get into that continuation, you wait for the breakout, you wait for the pullback, then you wait for the confirmation on the other side of the support and resistance. But if it comes back here and then just continues down, it just means that it was a fake out to begin with. I hope that answers your question. Okay, so that's one way to avoid by waiting for the reversal pattern candlesticks. That's one way to avoid fake outs. The other way to avoid fake outs is, oh, I don't have my pen, guys. I'm so sorry. I was going to draw a channel here. Okay, so the other way to avoid fake outs is to consider different kinds of technical analysis. So if you were to draw a hypothetical channel here, right? If you were to draw a hypothetical channel here, then you would have told yourself, oh, okay, there's a possibility price will not stop here and will go to the top of the channel first before turning back. Okay, but usually we don't do that. Why? Because if you're going to do that, there's going to be a lot of hypothetical channels. But I'm just saying that's just one other option to avoid fake outs. The thing about fake outs is it sucks. The very more effective way of avoiding it, I think, is just to wait for reversal pattern candlesticks. The other way is to consider other kind of technical analysis. I don't really do that because I think it's, although it helps, but I think it's so time consuming. Okay, so that's just two ways. Another fake out. Yeah, this is another fake out. I'm draw my pen. Okay, doesn't matter. Okay, so price broke out of this channel. It went to this area here. There was no way for me to kind of predict that price gonna reverse here. So when I see this, to avoid liquidity traps, instead of randomly getting any price for an entry, I would usually wait for price to pull back and then I get in for a buy here instead. So I extend this channel here, it does a retest here, and then I get in for a buy instead. Okay. Okay, so combining trend lines, channel, and Ichimoku together. I don't know if you guys want to take a picture of this or you want to write it down somewhere. Okay, this is a checklist that you can follow. I used to have a checklist that I printed it out and I bring with me everywhere, especially when, oh, actually I don't bring with me everywhere, I just stick it on my wall. And then I refer to that checklist every time I look for a trade. So the checklist that I have is kind of similar to this, okay, but there are a few things missing. So my checklist will ask, is there support and resistance, horizontal support resistance? Is price respecting Ichimoku? Is price respecting any trend line? Is there any key horizontal support resistance? Oh, okay, this is kind of like my checklist. It is near any key Fibonacci level. Is it near retracement, extension, projection, expansion? Where is the next level it might go to? Use horizontal levels as key targets, fine tune your Fibonacci. So I will tick, 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 tick all of this. If all of this, if I find a setup and all of this satisfy my requirement to enter a trade, then I will get into a trade. Hi, Deadbot. I just joined. Will this webinar be uploaded somewhere? Yes, it will be uploaded on YouTube. Yes, you can go look for it on YouTube. Oh, actually, if I'm not mistaken, I think IC Markets YouTube is currently like under maintenance or something. You can email IC Markets for this recording then. Because it's recorded, they usually post it on YouTube, but I think their YouTube is under maintenance now. So if you want it faster, you can just email them faster. Okay, so this is a checklist that you can use to find your setups. Okay, so playing the continuation. Oh, actually, I don't have a pen, so I cannot really add onto this checklist, but it's okay. Okay, so one thing now I've added onto my checklist. This is after like many occasions of trading, I realized that it's very important. After I'm done looking for my setup, okay, I will then ask myself, what is the risk to reward? I know that's not very relevant to, oh, I think so Delary is saying, I think the YouTube is working now, saw the video last week. Okay, yeah. So Jamilu is saying YouTube is working now. I think it was 2 weeks ago or 3 weeks ago. Their YouTube was under maintenance. I just wasn't sure if it was fixed already. Okay, so the last box you can enter is like, what is the risk to reward? I do a very strict practice now. This is one thing that I would say a lot of me passing all these prop trading tests falls within me following this rule very strictly. Like I follow this rule so strictly. If it doesn't hit my requirement, I totally do not trade at all. So that rule is that what is my risk to reward? Whenever I see a trade that is not 1 to 2, at least 1 to 2, even sometimes 1 to 2 is a bit little to me, okay? The trade needs to be at least 1 to 2. Actually, most times my risk reward is at least 1 to 2 and above. Okay, if it's not 1 to 2, I do not get into trade. Why? Because I saw this example and I realized one glance it looks like it's a 1-to-1 trade. That means if you have a $100,000 account, if you're risking $1,000, if price hits your stop loss, you're going to lose $1,000. If price hits your take profit, you're going to make $1,000. So the risk to reward is 1-to-1. That means out of 10 trades, you need to win 6 trades to be profitable, right? But let's say I'm doing a 1 to 2 kind of trade. That means if I have a $100,000 account, 1,000, price hits my stop loss, I lose 1,000. Price hits my take profit, I win 2,000. That means I need to lose 2 trades to cancel out 1 win. So out of 10 trades, as long as I'm correct 50% of the time, technically I'm making money already, right? But if you're doing 1-to-1, you need to win more trades. Your win rate needs to be higher. So it's a very good example because I'm taking my 7th test, right, for my Forex fund right now, my 7th test. Just as recent as last week, my account was at -3%. Just as recent as last week, my account was at -3%. Okay, this week, today is today Monday or Tuesday? Okay, today is Tuesday. My account is at +3% because was it Monday or Friday? Okay, last Friday I took a 1 to 6 trade. That means I was risking $1,000 to make $6,000. I can't hear you any longer. Why is this? Why is the audio affecting people one by one? Do you have the link for YouTube? Hey Charles, you just need to go on YouTube. You can just need to go on YouTube and you just need to type IC Markets and then their channel will come out. Okay, Desiree can hear me fine. Why do you take so many tests? Because I want to get funded. When you get funded by these companies, there are profit splits. So why do I, okay, there's like 3 of you asking, why do I keep taking this test? Every time you take this test, the company gives you the funding. So let's say I take a $100,000 test. I pass the test, they give me the $100,000. So I technically got free $100,000 in a way. That's why I keep taking it, because it's free funds. Not really free funds because I had to work for it, but yes, I am now trading other people's money instead of my own money. Don't take me wrong, I do still trade my own money, okay? I do still take my own money. Why don't you take the larger account, 200,000? The reason why I don't take 200,000, and I am quite embarrassed to say this because I've been trading for so long, is because the 100,000 is easier for me to count the lot size. Yes, I still manually count my lot size until today. Even though Desmond, that you guys see every week, Des is always like, Cass, why are you doing this? Why are you still manually counting your lot size? There are programs out there, and there are programs out there, and there's like calculators out there that will help you count your lot size. But I find that it's easy to just use 100,000 and mentally count my lot size. So that's why I go 100,000 at a time. I trade 1 hour and 4 hours most of the time. Yeah. Okay. So plain and continuation. Once I see that price. This is a very good example, by the way. Okay, so there's a horizontal level here, there's overlap here, there's Fibonacci, 2 Fibonacci levels, 3 Fibonacci levels standing up here. It lines up with the channel. This is a very good confluence. You enter here for a sell, and then you get in for a sell. Okay, so how I would have made this a better risk to reward trade, I would have moved this stop loss slightly lower. This is probably Des, by the way. Des is putting the stop loss. I can see why he's putting a stop loss above this swing high. It makes it a very safe stop loss, but the risk to reward is not great anymore. It becomes a 1-to-1 trade. I rather take a bit more risk, put the stop loss a bit tighter, and then my risk to reward probably becomes 1-to-3. Do you take every trade twice, one for FOMC and one for yourself? I don't. So all my accounts are linked. That means I can take a trade on one account and all my account will just copy the trades. Yes, there are many programs out there that can make your life very easy in trading, but I still manually count my lot size. I struggle to count manually, which actually refer. You only trade 1 hour a day. Yep, I only trade 1 hour a day, sometimes less. Like yesterday, I traded for 15 minutes. Can I get your personal email? Okay, my pen is not working. There's no way for me to write my personal email. Let me type it here. You guys can email me if you want. It's synye@gmail.com. I don't know if you guys received it. I typed it in the chat box and I pressed send to all. Let me know if you guys received my personal email. Did you guys receive it? Can you guys let me know, yes or no? Yes. Okay, cool. You guys can just email me. The thing about IC VIP, there's a request. I'm not really. I'm more of just doing these webinars for Everest now, so I'm not very active on ICVIP anymore. Yeah, so I think best to just email me. Okay, let's move on. This is another example of playing continuation using support resistance. So we've got a horizontal support here, we've got a channel here, we've got Fibonacci levels here, everything lining up. You enter here for a sell, you take profit here. Of course, if it was me, I would have moved the stop loss so much lower. I think this stop loss was unnecessarily far, but I would have moved it so much lower. Okay. So playing the breakout. So this is what you need. You need to ask yourself, did price cross below the Ichimoku crowd? Did we have the Ichimoku momentum on our side? Did price break any trend? Did price break a recent key horizontal level? Did price break a recent key Fibonacci level? Check big retracement. Where is the next key level it could break out to? Use horizontal levels as key targets, fine-tuned with Fibonacci. Okay, so this is the rules when you're playing breakout, but I personally don't play breakouts. I only do reversals. I do not play breakouts. I only do reversals. Reversals is like I'm going to enter here for a sell. Okay, but breakout is like waiting for price to break this area and then you get in here for a buy. I don't play breakout because I am someone who plays a very tight stop loss. If you are playing breakout, your stop loss needs to be, you need to give a bit of breathing space for your stop loss. I don't like playing a big stop loss because then my risk to reward will not be amazing anymore. Okay. What is the advantage of being an ICVIP member? If you get a ICVIP membership, you can interact with our other traders and our other analysts at Everest Fortune Group. They will help you with your trading. What's your typical stop loss distance? Okay, because I'm always looking for sniper entries. You know what sniper entries are? So sniper entries are like, if I say the entry is 125.744, I expect my entry to be 125.744 or slightly above or below that. Okay, so I'm always looking for sniper entry because my entries are so accurate. Okay, not all the time, but a lot of times my entries are very accurate. There's a lot of times I don't know if you guys see it, ICVIP, there's a lot of you messaging me, oh my gosh, your entry on gold was on the point, it was on the dot, it was blah, blah, blah. Okay, I like to look for this kind of entries. No, I don't need your personal email, that bot. Okay, so I will try to find the best entry I can possibly find, and then I just put my stop loss slightly below that entry because I don't even expect, like maybe I'm a little bit overconfident, but I don't even expect price to go below my expected entry. If it does go below my expected entry, then I just take it as like, okay, I was wrong, and I just move on. Okay, but a lot of time, let's say I think the entry is at $10. A lot of times at $10, it does really reverse on the dot at $10. Maybe sometimes it reverses at $10.20, for example, or something like that. What's your name in TradingView? I don't have a my account is a free account. I don't post anything. I just go do my analysis for 15 minutes and then I go live my merry life. Playing the breakout. That's why I don't know why when people find out I'm a prop trader, a lot of people ask me like, oh, does that mean you sit in front of a computer all day? Does that mean you have 10 screens at home? Like, no, that's not. I don't know. I think you guys watch too much TV. I am a prop trader. I'm funded 6 times. I passed this test 6 times. I only have 1 laptop. Sometimes I trade from my phone. I had a phone call who is asking for email address. No. No, someone was asking me for my personal email, so I typed my personal email and I send it to everyone. So I'm not asking for anyone's personal email. I am giving you my personal email. Okay, so playing the breakout. Usually after the breakout, I wait for a retest. I don't usually play breakout anyways. I wait for a retest and then at the retest, I enter for the buy. What is your main trading pair and the most successful goal? XAU USD. I only trade XAU USD. I think for the last 6 months, I only trade XAU USD. If I turn on my trading view right now, it's automatically on XAU USD because I don't even look at any other charts. Okay, so playing the breakout. One breakout, you want to look how to play this breakout. You want to wait for price to break this trend line. Then you want to wait for price to break this horizontal line. That's your first confirmation, second confirmation, and then you can get in for the sell here. Okay, this is a good way to play breakout. Yeah, so it already broke the trend line. Now it's going to wait to break this horizontal channel. Sorry, horizontal support. It breaks, and that's where you enter for a sell. Okay, this is another example of playing the breakout. I'm going to quickly go through this because we've run out of time. So first breakout, breaking the trend line. Second breakout, breaking this horizontal level. The third thing you want to do, wait for the retest. At the retest, enter for a sell. Stop loss again. I don't like how this stop loss is so far away. Playing the breakout, another example. Break of this green trend line here. That's your first sign of a breakout. Second sign of a breakout, this horizontal blue line here. This horizontal resistance was broken. Price comes back and retests, and then you enter for a buy. Okay, so that's how you play a breakout. This is a very good risk to reward. Same thing, wait for the breakout, wait for the pullback. At the pullback, the retest, you enter for a buy, then you take profits right there. Okay, that's all I have for support resistance. I'm gonna answer some of your questions. What are some of the funded traders? I use FTMO in my Forex fund. I haven't looked into others yet because I haven't even hit my target for FTMO, my Forex fund. Do you place orders or do you buy, sell all market price? Okay, I place orders because a lot of times, the most active times you guys would know is actually the New York session, right? So a lot of times the volume happens during the New York session, but there are times I wake up and I'm just like, oh, but I'm free right now. I'm free right now, it's 2 p.m. So I do my analysis at 2 p.m. Obviously, price is going to be very far from my entry. So I usually just use a pending order. When price hits my entry, then it triggers and then get in. But of course, again, the best practice is to wait for the reversal patterns candlesticks for your confirmation. It seems like the key success is the risk to reward ratio. We'll rethink this. Yes, I would say my key success is risk to reward. Once I manage to master risk to reward management, that means once I mastered my risk management, my account was becoming very profitable. So please, the number one thing you should do is master trading psychology. Number 2, risk management. Number 3, technical analysis. Technical analysis is the last thing you should be mastering because let's be honest, we learn about technical analysis today. We learn about support resistance today. If I get a 12-year-old to come here, I get an 8-year-old to look at the screen, are you telling me the 8-year-old won't be able to identify a swing high and swing low? Technical analysis is so basic. The hard part is actually mindset. The hard part is actually risk to reward. I don't do stocks, options. I do cryptocurrency. I buy and hold cryptocurrency. I have long-term investments, but not so much on options. Sorry. Oh, have fun, Simon. Enjoy your trip. Okay. So everyone, I will see you guys the next time I'm doing this webinars. I'm not sure when. Let me just check my schedule. Let me check my schedule on when I'm seeing you guys next. I know I'm doing quite a bit of IC this month. I think the next time I'm seeing you guys should be tomorrow. I'm seeing the Malay Bahasa people. So I'm going to see Henny, Tat Troy, the Bahasa people tomorrow. After that will be 24th, I think. I think it's 24th or 25th. I'll be seeing you guys again. So it should be 24th. Okay, so thanks, guys. Take care. I hope you guys grow your account. I hope your trading improves. I hope if you are not already making a lot of money from trading, I hope you make lots of profit. Yes. Anything, just email me, okay? I'll try my best to reply. Okay, see you guys on the 24th. Bye, guys. Bye. Thanks so much. Bye.